Good morning, everybody. Paul here, coming at you with yet another Crypto Coffee update where we keep you up to date on all of the news, happenings, events, conferences, asteroid strikes, probably not those, etc., in the crypto space. And of course, you know I have my coffee for a simultaneous sip where we enjoy a sip of just tea or water, or in my case, coffee, to start the day right in solidarity together. So, join me. Delicious. All right, so what do we have on the agenda for today? Well, of course, we have CryptideCast, our beloved website, where you can check out all of the information that we will be discussing here today and more. I'm not going to bore you with going over all of the details, as you could see those for yourself if you visit Cryptide.cc, or we've did that in some previous Crypto Coffee updates. So we'll do that maybe a little later on, a couple days from now. But for now, let's go ahead and check out the main meat of the matter, as I like to say, which is the news for the day. We're going to be kind of bebopping around from crypto projects to government regulation and then back to some privatized companies. So kind of intermingled here today rather than taking it in our normal segments subject by subject. So we're spicing it up. And speaking of spicy, there was a spicy Zcash bug that could have potentially led to a deadly infinite counterfeit issue in which a savvy user, if he had a huge body of knowledge about cryptography, could have exploited and created a, as said, near infinite amount of Zcash for their own using, nefarious or otherwise. It's important to note that this does not affect the anonymity of users in any way, shape, or form. It simply allows the individual exploiting the bug to augment the supply. But that's not an issue anymore considering it was fixed. Now, how this went about was very interesting, almost like a spy movie. Essentially, this has been in place since 2013, so anything could have happened over the last, how many is that, 6 years that this bug was in place. However, this escaped a multiplicity of audits and the minds of the best cryptographers in the world, so assumingly nobody was out there with the skills and capability to take advantage of such a bug, and once it was discovered, everyone in the Zcash team remained extremely tight-lipped about its existence. The only crypto projects that were shared, that were given this information, shared this information with, were Komodo and, Horizon, formerly called Zencash. These are some of the highest market cap privacy coins that utilize the same architecture, and it's reasonable that the Zcash team wouldn't want to put out this information in the public before the bug was formally fixed. Now, it seems that all is well now, and any coins that are utilizing this version of ZK Snarks, the sapling upgrade specifically, should probably begin to take a look at fixing this bug themselves, assumingly Zcash will be willing to work with these kind of projects now that the bug is out in the open. Now, Amin Gun Sarer said that this is something that is a problem for these privacy coins. However, Peter Todd, another individual we've talked about a couple times on this channel, said that this isn't specific to privacy coins, and it's only one of the 2 issues that have plagued Zcash of this caliber that were fixed without network issue on the part of end users. And reasonably, it isn't fair to say that this only plagues privacy coins, because if we recall, Bitcoin Core as well had to implement a fix that would have caused a similar runaway inflation scenario in which a savvy user who is very familiar with cryptography could have taken advantage of this vector of vulnerability and enriched themselves at the expense of the network. Now, this didn't happen on the Bitcoin network, nor did it happen on the Zcash network, so all is well that ends well. However, this is just a stark reminder that these systems are indeed vulnerable in some ways, shapes, and forms, and a lot of the time this kind of due diligence is extremely imperative, not only on the part of cryptographers, but on the part of individuals in the space as well, who may, for whatever reason, have the ability to spot these kind of bugs, whether through circumstance, happenstance, or just intelligence and incestuous digging through the code base. So shout out to the Zcash team for finding this, and not only keeping it quiet, but sharing it with the other projects in the space who would be most impacted and getting it solved in a timely manner. That's something that Edward Snowden definitely echoes as well. He said he is a fan of Zcash despite the founder's reward for the reason that it kills all serious in-house bugs before they get exploited. At least so far, so good. Alright, now speaking of tokens, TRX, which is Tron, why can't I see my tokens? Dude, where's my TRX? Great movie, Dude, Where's My Car? So essentially, my Ether wallet removed the TRX ERC20 token, which is the Tron token that was situated on the Ethereum network, from their default list. This has caused some users to become perturbed because they actually missed a window to migrate their Tron ERC20 tokens over to the Tron mainnet. Interestingly enough, it seems that when Tron migrated to their mainnet, they as well took the Ethereum J library with them. Go figure. Now, interestingly enough, this has, as said, irritated some users, considering that this message was broadcast on social media for 6 to 7 months, but apparently they did not get the message that their investment needed to be migrated to a mainnet. The swap period is over, and there's nothing that my Ether wallet can do about it. So rather than keeping the TRX ERC20 token, which now has no value either on a network or, well, I guess it does have some value as a collector's asset on the Ethereum network, so maybe not no value, but nonetheless, it definitely does not have the network applicability advertised for Tron tokens, considering Tron itself is now a separate entity from these TRX ERC20 assets. Now, the best thing that they can do is essentially say, hey, you know, if you have these tokens, what can I do now? They're not something that should be hodled, as is the common meme, but rather these vintage tokens could really be swapped over to the mainnet. This isn't something that Tron themselves support, and this is up for speculation. What do you guys think? Do you think that these projects who migrate from the Ethereum mainnet, like Tron, EOS, and more, should support token migration indefinitely, perhaps over the course of many years, rather than over the course of many months, to ensure that even the stragglers are able to get their tokens out of the Ethereum network and onto the main nets of their respective projects? That's really up to debate, and it seems as though this has left only a handful of users in a tight spot. And my Ether wallet's recommendation is to essentially maybe try and find an exchange through which you can migrate. But of course, in the spirit of security, we here at Cryptide like to say, of course, do your own research, but check before you make any moves and ensure that perhaps by corresponding with the Tron community or the Tron help desk itself, get an idea as to what exchanges may be supporting token migration and if token migration in and of itself is even still supported. But this is, again, a stark reminder as to why keeping abreast to your investments is extremely important, especially in these early wild west days of crypto, when a lot of these things will be blasted on social media, but you're likely not going to get any push notifications on your mobile device or see anything on CNBC letting you know about these changes. All right. Now, speaking of large institutions, fusion. All right. So Abra has launched a new stock trading service that allows you to turn your Bitcoin into stock, which is extremely interesting. And I'm still unclear as to how they managed to take this regulatory spaghetti and spin it into a very nice knitted fabric. But essentially, Abra is allowing you through a portal to change your Bitcoin into stock that is pegged to the actual stock price of the underlying asset. So as said, it'll offer 50 assets including Facebook, Apple, Amazon, and Google, so the big tech companies. Instead of purchasing the actual stock, Abra's platform allows users to buy a Bitcoin representation of the stock. So particularly interesting. I suppose this could kind of be thought of as a stable coin instead of rather being pegged to the underlying value of the US dollar, which is a stable denomination of 1. This Bitcoin will be associated with the underlying value of the stock. So assumingly, as this moves up and down relative to Bitcoin, you're going to see either increases or decreases. So this opens up a new vector of tradability, I guess you could say, for these individuals who are so inclined to delve into the stock market with their Bitcoin. So their so-called C3 system converts the cash into Bitcoin, so you can indeed use cash to do so. Really interesting stuff, and again, is reminiscent of Robinhood or TD Ameritrade. Robinhood recently started offering what is considered a bank account, but not exactly a bank account. Essentially, it's like a managed money sort of account in which you can earn interest, really good interest actually, but there is some caveats. For instance, the Robinhood bank account is not FDIC insured, meaning that if anything were to happen to the Robinhood company or application, your money isn't necessarily backed up. They do have a secondary version of money insurance. However, upon further review and a reply from that insurance company specifically, they said that in the event of insolvency, due to the nature of Robinhood's activities, it would be very unlikely that such a situation would be covered by the insurer. So again, we're in the wild west version of crypto for the time being. So the idea that these kind of exciting new innovations are coming out is indeed exciting. However, we have to approach it as well with an air of skepticism and caution, knowing that any significant amount of money placed in these kind of services is, one, not owned by the individual. Remember, not your keys, not your coins. Say it with me now. Not your keys, not your coins. You are essentially giving them to a third party that you are entrusting to credit you for the reflective balance that you deposited. And any subsequent gains or losses. And as such, you are exposing yourself to what could potentially be a disproportionate amount of risk. But only you know that. It's your portfolio. Just a word of caution from your friend Paul here at Cryptide. All right, so next up we have a Bitcoin ETF, which is inevitable, says who? The SEC commissioner. So pretty big news here. However, not everything is as it seems. We're going to be examining why here momentarily. But this individual, what's his name again? Robert J. Jackson Jr., who's the commission's lone Democrat, expects a Bitcoin ETF filing to eventually satisfy all of the required standards set forth by the body. Now, here's a quote. Eventually, do I think someone will satisfy the standards that we've laid out here? I hope so, yes, and I think so. Getting the stamp of approval from the deepest and most liquid capital markets in the world is hard, as it should be. Once we make it available to every mom and pop investor, we are taking risks that Americans can get hurt. And after all, this is the SEC's reason for being a thing. They're supposed to protect American investors from potentially fraudulent investments. So think if there was a Ponzi scheme on every corner. Yes, most individuals would grow accustomed to that. However, there would be some perhaps more gullible, perhaps more trusting individuals who would enter into these unscrupulous business arrangements through which they had no protection. So I could agree with that statement that it should be pretty difficult to do so. But again, not everything is as it seems. It seems the source for this actual article itself comes from a tweet from Drew Hinkes, either way, I guess. But essentially, it is just an excerpt from this post that is to be released on February 11th. We are looking at February 7th at the time of recording. So in the next couple days, we will see if this is indeed something that can be more corroborated from the direct source. So we'll take it with a grain of salt, leave it on the shelf, and perhaps revisit it when we have the formal primary source to cite. Now, Korean Central Bank study is saying that issuing digital currencies poses financial risk, and that's kind of like a, well, yeah, no duh. Any kind of financial activity, of course, has some kind of implicit and explicit notion of risk. However, it's very interesting to see what they're saying here. The BOK published a study on Thursday which modeled how CBDC, which is central bank digital currencies, and issuance might affect liquidity for commercial banks. And I found that interesting. I'm like, okay, isn't the entire point of a central bank digital currency to allow for more fluid denominations via that was very poorly phrased, sorry. So basically, you can send currency from one bank to another and ensure that these payments are final in real time rather than having to wait for end-of-day settlements only between banks. However, it seems that the Bank of Korea here is looking beyond just bank-to-bank transfers and saying that it found that if the public, so we're talking about a full wholesale implementation of a CBDC, could access the theoretical digital currency directly, commercial banks' demands, deposits, or reserves could be reduced, leaving them with a cash shortfall. That is a very professional way to say a good old-fashioned bank run, meaning that if many individuals from the public had, for some reason, maybe speculation as to a level of insolvency with various financial institutions, and a certain amount or caliber of group of people made a run on the bank to withdraw their funds, this could in turn negatively impact the reserves and the demand deposits. Meaning that it would very negatively affect the bank's functionality and could lead to a cascading effect of potential insolvency. Now, that could eventually force them to compensate by raising interest rates or loans, the central bank explained. And again, we're talking about a wholesale CBDC. Now, they haven't commented per se as to whether or not the Bank of Korea has taken a look at more of a retail implementation for a central bank digital currency by which individual public users could not access this currency, and rather it would be used for a kind of back-end settlement, something kind of similar to Ripple's X-Current. X-Current allows banks to settle liquidity back and forth without using the XRP token, whereas XRapid allows individual banks and institutions to use the XRP token as well. So didn't quite take a look at that, really just kind of a wholesale implementation, but nonetheless an interesting conclusion coming out of the Korean Peninsula. All right, so next up we have New Zealand saying that they are making excellent progress on the Cryptopia hack. Cryptopia didn't seem to be making great progress themselves, considering, as we talked about in a previous Crypto Coffee update, they were hacked not only once, but the same hackers came back and started cracking new wallets again, which isn't a great look for Cryptopia per se, but the authorities are on the case. The investigation has lasted for around 2 weeks, as has the attack. Tens of thousands of Ethereum have been stolen. We're talking about over $1 million worth of currency here. And here we have a quote from Detective Inspector Merton, He commented, "Excellent progress is being made in the investigation, and we're working with Cryptopia management plus current and former employees who have been providing valuable assistance." So, a good positive word about the Cryptopia investigation. I believe this exchange is still saying, "Hey, don't use us for the time being. Wallets are all frozen." And here's a quote from Auckland University Associate Professor of Commercial Law. "No one seems to have a clue what's going on, but this hasn't come out of the blue." And that's a little bit of a less positive comment that reflects on Cryptopia and perhaps their security practices as well. No word yet as to whether this attack has been a breach of the hot wallet alone or the cold wallets as well. Again, we were talking about Quadriga CX, the exchange that allegedly had a cold wallet, didn't have a cold wallet, where the founder passed away. So really, it's all about best in practice security measures to ensure that this kind of thing doesn't happen, but you really can't be 100% secure per se, and it's always unfortunate when this kind of thing unfolds. Oh, and I got it wrong. It wasn't 1 million, it was 16.1 million. Whew, that's a pretty large figure. All right. We also have how much decentralization is enough. Vitalik says high TPS projects are centralized piles of trash. He didn't. Spoiler alert. I watched the video. He was talking about the idea of node centralization and how some reflexivity of the network and decentralization is ultimately lost when you have a semi-permission system by which you have a selected group of nodes, such as in EOS or Tron. So in EOS, you have 21 nodes. In Tron, you have 27 super representatives. Huobi has already been accused of bribing individuals or colluding with other block producers in the EOS system to elevate its status into being a block producer itself. So you're already seeing a level of collusion between these entities. And Huobi is not only a block producer on EOS, it is as well a super representative on Tron. So getting that sweet double dipping going on. And this is a point we've made previously on Cryptide. It's all about network flexibility. And this kind of thing makes the incentive for cooperation and collusion potentially greater than the incentive for competition, which is ultimately the goal of these kind of systems, to ensure that a level of collusion is not more profitable than competition, thereby rendering the rest of the network at the behest of these individuals who are colluding in a type of oligarchical plutocracy. That's not what we want, and that seems to be what Vitalik doesn't want either, as he said, quote, "Blockchain solves the problem of manipulation. When I speak about it in the West, people say they trust Google, Facebook, or their banks, but the rest of the world doesn't trust organizations and corporations that much. I mean, Africa, India, Eastern Europe, Russia, it's not about the places where people are already rich. Blockchain's opportunity is the highest in countries that haven't reached that level yet." This is a quote back from 2018. And as said, I took a look through this entire video. It's a great video. I watched the beginning part of it before, so I went back and kind of just chewed through the whole thing and kind of got caught up there. Was trying to poke around here. The video starts about right here for the link, but I didn't find anywhere where he explicitly called these blockchains centralized pieces of trash. He really just commented on the flexibility of such architecture and how it's not really truly decentralized, considering attackers would have a much smaller vector by which to manipulate these networks. So, definitely interesting stuff. You see a lot of stuff like this in journalism to try and drive more clicks and whatnot, but I'm all about doing due diligence and checking behind this kind of stuff. So trying to elevate the crypto space in terms of reporting on news and just making sure to corroborate what is real and what may be potentially overblown. So we also have, speaking of Quadriga CX, the CEO died under this hospital's care. So this Indian hospital over in, where was it? I think it was Jaipur. Yeah, Jaipur came out and said, hey, yeah, this guy, he definitely died in our hospital, so that's a thing. They are a hospital. And this complicates things pretty heavily, considering the fact that this individual apparently was the only arbiter for the cold wallets that contain roughly $190 million worth of users' funds. He lasted less than a day in the hospital. He was checking out essentially a orphanage he wanted to build, and it seems as though he indeed passed away. Just maybe potentially due to the pathogens in the region, considering that he was traveling half the world away with an autoimmune disorder to a nation that isn't necessarily known for its high standards of cleanliness. Not the most incestuous decision in my opinion, but definitely a tragedy. If this can be corroborated and can be confirmed, then I think this may put a cork on any speculation as to whether or not this is potentially a scam in the making, or whether it's just a result of a really a tragedy, not only for the individual and for his family and loved ones and close relatives, but also for the crypto space as a whole, and especially the users who have funds on this exchange that they can no longer access. Now, this exchange was granted protection by the Canadian courts, so we'll see what kind of remittance ends up happening as its assets are wound down, as this wallet is explored with greater scrutiny to see who may potentially have access to it. But suffice to say, it seems as though the story is leaning more towards that of a tragedy rather than treachery. And so we will put a cork in that for the time being and give you more information as it comes out. Again, everything below in the description. So if you're trying to do your own research, get an idea as to what's going on, we share that information with you. Yeah, excuse me, itchy nose. Allergies have been crazy here, guys. Okay. Mt. Gox trustees sold Bitcoins in the exchange and not over the counter. That's something we mentioned in the last Crypto Coffee update. There were some speculations as to, what that may entail. And interestingly enough, you can see here the points in times which this individual with huge amounts of Bitcoin allegedly sold. And each one precipitates, if not a sideways movement, followed by a downtrend, an immediate downtrend. Let me just zoom in here so you can get a better idea. Let me do my old man zoom slowly but surely. Open image in new tab. How does this newfangled technology work? There we go. Yeah, so you can see 2,000 Bitcoin caused a small dump. 6,000. I say caused as in like that's like the sole cause, but that's not necessarily the case. Really, it could just be a catalyst by which market action and price discovery ultimately dictates that it's moving downward. So you're seeing that happen here, you're seeing that happen here, here, and here. So it does seem as though, if not the direct cause, it had some explicit effect on the potentiality of the price moving in a downward trajectory. And this is from the CEO of Kraken, Jesse Powell. For the record, Kraken was asked many months in advance for advice on how to sell large blocks of coins, and the answer was 1, don't sell coins. 2, if you have to, do it with an auction. Kraken can totally facilitate that. 3, if you want to do it more privately, let Kraken know when they have an over-the-counter desk broker that can do it for you. However, it seems as though perhaps this creditor or this individual who holds these coins decided to take another course of action and, quote, unfortunately, we have no visibility into where, how, or why the trustees sold the coins, nor whether any precautions were taken to prevent front-running or self-dealing. Hopefully, the trustee will make it clear what their process was and put these questions to rest. Now, again, a lot of speculation, but it does seem that this is indeed what occurred. The Mt. Gox trustees sold their Bitcoin on an exchange. After experiencing Mt. Gox, it seems kind of silly that they would trust another exchange. I guess old habits die hard, but nonetheless, Jesse Powell confirms that, and we'll see what that causes going forward. I don't believe this could be the sole cause for a drawdown in the market and a bear market proper. However, with such calculated sell-offs, it may have well helped along the process. Now, we have something talking about energy here today. Being that we're talking about Bitcoin, we're talking about cryptocurrencies, proof of work has entered kind of the limelight in terms of its energy consumption. Sustainable energy uses, fossil fuel emissions, greenhouse gases, that is a huge subject in today's political landscape and in just the environmental landscape in general. And given that proof of work produces a huge amount of electricity consumption, one has to wonder what effect that may have on the environment overall. The media narrative seems to be that Bitcoin's environmental impact is going to be voracious and potentially tear the world apart, including targeting specific species of native birds and killing them off in succession. Also, basically any endangered species Bitcoin is gunning for. If it's on the endangered species list, you better watch out. Completely joking here, guys. Essentially, the media narrative is from Alex DeVries. This guy wrote an article in Scientific Direct, and I have a lot of bones to pick with this guy, but luckily they've all been picked for me, which we'll see here momentarily. We're not going to go too much into the details. As said, it's really a media narrative talking about how this is definitely going to end the world. Lots of greenhouse emissions, not that great. However, Alex DeVries was then accused of an overly simplistic approach to his calculations, and that's being so generous. This guy's calculations were like back of napkin kindergarten status, and let's explain why. The reports of Bitcoin environmental damage are garbage, and this is a guy who's been working in the energy industry for well over 2 decades, it seems. He worked for this guy for about 8 years and has been in the energy industry in other capacities since then. Patient Zero, again, Alex DeVries, this guy, 20-something-year-old, and we're not going to go piece by piece and examine this entire article. It's a fantastically written article. It's really, really well written. I went and took a look at Alex's rebuttal, which I didn't think to open here for some reason, and it was extremely weak. It wasn't even really a rebuttal to the points that were brought up. It was just kind of like a, haha, yeah, right, kind of thing. So just this is why doing your own research is so critical. Essentially, what this individual, this individual with credulity who has experience in the space, contacts in China, and has put forth an analysis with actual sources rather than self-referential material, as Alex did. He says that essentially, due to the mobility of Bitcoin mining and crypto mining in general, and the ability to relocate geographically, things that hospitals, schools, and infrastructure can't easily do, much of the power consumption is being used via sustainable sources. So things like hydropower and wind, solar, that sort of thing, is what's being used due to the fact that it is subsidized by the Chinese state specifically. And Alex goes on to write, additional research published in et cetera, suggested Bitcoin mining alone could push global warming above 2 degrees Celsius within less than 3 decades, which is a huge jump in temperature. I mean, just trying to conceptualize that is the world would be much hotter, ice caps would be melting, things would be going crazy. However, again, this individual goes into the actual numerical breakdown of how Alex arrives at his figures, and suffice to say that these are not just suspect at best, but they are blatantly fraudulent, considering that, as previously stated, not only are they self-referential, but they are indeed, if not self-referential, extrapolated off of assumptions made from sources that themselves don't define their methodology. So very important. All right, again, not going to beat this too intensively because the information will keep flowing out of it. It's a really juicy piece, so take a look for yourself below in the description. And now for your feature presentation. Overstock. They are working with the Mexican government to put land on the blockchain. I found this very, very interesting. It is a company called Medici, which happens to be a subsidiary of Overstock, and they're working in Mexico to ease the process of putting land that is owned but not formally owned, if that makes sense, onto the blockchain. And a lot of these nations, Mexico in particular, and other South American nations, the notion of land ownership is formalized through either generations of ownership or cash deals or even barter, in which land changes hands with relative fluidity. However, documenting this kind of process, especially in rural, impoverished areas, is, suffice to say, difficult at best. So, by tokenizing these kind of assets and allowing individuals to trade these assets themselves using a digital network, that could very easily help to facilitate a process that is otherwise complicated when centralized in remote regions. Now, again, easing the process, quote, the signing of this memorandum of understanding between the municipality of Tulum and Medici Land Governance represents the beginning of a new territorial ordering stage for the digitization of land ownership and related processes. Very well said there. And without formal ownership, individuals struggle to obtain access to credit and public services, while governments are limited in their ability to collect taxes, enforce property rights, and plan for economic expansion and innovation. So this not only affects the individuals who own the land, but it also affects the governments themselves and their ability to claim who owns what. So the fact that Overstock, the company that sells you slightly overpriced rugs, is going to do this kind of land management system on a blockchain, I found just fascinating. And so I did a bit more digging, and you can see here Medici, this is the company themselves, very nice statue of David there, and it talks about how they're just basically a more humanitarian focused kind of entity, talking about allowing everyone, including the poorest members of society, to participate in local, national, and global markets. And they don't just deal in property, as you can see here, they deal in all kinds of blockchain based just stuff. As said, you can see everything here. And they're a wholly owned subsidiary of Overstock.com. So you may think of Overstock as the company that, as said, sells slightly overpriced rugs, but you can use Bitcoin to buy them. They also have these subsidiary entities that are very, very heavily involved in the blockchain space, demonstrating that these companies are branching out and exploring new applications extrapolated off of their growing familiarity with this kind of distributed technology. So very exciting stuff there. Worth checking out the website. And I also found from January 24th of this year, this is something I did not see reported on really anywhere else. I guess it was just a footnote given some of the excitement happening perhaps alongside of it, but Overstock T0 is a token platform, and it's officially opened for trading. So another Overstock entity that is getting really deep into the weeds with assumingly everything that has to do with blockchain. Now I did see something here about Ravencoin. Oops. Nope, that must have been a different article. Is it over here? Yeah, we're doing this live, folks. Oh wait, no, it was Medici. That's right, they have news. There it is. Medici Ventures completes $3.6 million securities token transfer using the Ravencoin blockchain. This is something that just kind of got my noggin jogging. I got thinking about it, and I'm like, wait a minute. Overstock has made investments into Ravencoin. I wonder if they're using Ravencoin for, in some capacity, for their own activities, given that that would be kind of a self-referential, self-reinforcing capital investment. And lo and behold, it seems as though my hypothesis was correct. They are indeed using Ravencoin, at least for Medici Ventures, to complete security tokens transfers. So very interesting stuff there, tendentially related. But as said, they also have another arm called T0, which is at least partially, perhaps wholly owned by Overstock, that is delving into token trading as well. So just a point to highlight that these institutional entities are not only interested but actively working behind the scenes, perhaps in often underreported ways, to demonstrate that not only are they interested, but they're actively investing and growing the space themselves. So with that said, I believe that's all we have for the day. Thanks so much for watching, guys. It is a pleasure. Let me know what you think of this content below in the comments, and of course all of the sources below in the description. But for now, my name is Paul, signing off. Thanks so much for watching. We are Cryptide, and remember, the tide is rising, as is Overstock's involvement. Whoo-wee.